Hello, everybody, and welcome to the Crypto Hipster podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, artists, you name it, all over the world of crypto and blockchain. And I have another amazing guest. All my guests are amazing. I'm looking forward to this. We are on the ground at Consensus 2024 in Austin. And I'm learning that there's good barbecue here and lots of other things.
You just learning that now?
I'm learning that now. My guest today is Hayden Patrick. He's Director of Business Operations of Cordial Systems. Hayden, welcome to the show.
Hey, thank you, Jamil. I'm happy to be here.
Happy that you're here, yeah. And I'm just learning it now. Let me kick things off and ask you first, what is your background, and is it a logical background for what you're doing now?
Absolutely not. Yeah, my background 3 years ago, this is not where I'd be, right? So I actually just retired from the Navy 3 years ago. So 24 years of service, was coming up on the end of career. I was actually working at the Navy ROTC unit at Rutgers and Princeton University, working on my MBA at the same time. And came up with an idea with my brother to start a company. And that company was SoloKeys, which is a two-factor authentication hardware provider, tackling Yubico and YubiKey, right? Providing an open source solution. So we did that, had a couple of Kickstarter campaigns that were relatively successful, and it attracted the interest of Jump Trading. And Jump Trading had an interesting solution, or an interesting problem they needed to fix. They were basically using a SaaS-based MPC wallet that had been bought out by another entity, and now they need a new solution for control of digital assets. And what they opted to do was to bring our team on board in order to build for them a treasury platform that provides all the functionality that you would expect from a SaaS-based MPC solution, but it would all be run in-house, in-stack, and independent of third-party interference, if you will. So that's how we got started into the world of crypto. We kind of jumped from providing security and authentication certificate with regards to two-factor authentication, and then we got pulled into writing software to support cryptocurrency operations.
So what did you do in the Navy?
Oh, in the Navy, I was a surface warfare officer, nuclear qualified. So what that means, I drove ships and I operated nuclear propulsion plants on aircraft carriers.
I guess that qualifies you to create custody solutions in crypto?
Well, what it qualifies you is to have a process to learn challenging material and be able to apply it in a professional setting, right? One of the cool things about what we did in the Navy is like every 2 or 3 years, you're moving up, you're taking on new jobs, and you have to be current. And so you learn. And this last 3 years for me has been another exercise of learning a new technology. Sure, different terms, different concepts, but at the end of the day, how do you make that work into a functional product?
Through the same process, thought process.
Yeah.
That makes sense. So it is logical. Navy to blockchain. I love it. So, Cordial Systems.
Yeah.
What do you guys like? You told me a little bit of the background, but what do you focus on? What's your main strength? What do you bring to the market?
Right. So, what Cordial Systems brings to the market is, again, this self-hosted treasury platform that operates with a trustless security model. So if you think of any institutions that need to have control over their keys, and they need to have control over their digital assets, this is a product that provides them the ability to do that in-house. So we successfully ran this for over 2 years with Jump Trading, handling the operations load of one of the apex traders in the space. And we had the opportunity to take it to market. And we have another crypto exchange that we have signed a deal, and they're using our technology, and Backpack Exchange. The team behind Mad Lads, I don't know if you're familiar with them. So yeah, they started the Mad Lads, and then they started Backpack Exchange. And we have another exchange announcement that should be pending here in the next week or two. So We're starting to grow. But bottom line is we have a a software contract that you can enter into where you essentially import our software into your tech stack. It's got the appropriate API, hookups as needed in order to operate within the institution's operational user security network. So if you can think about it, you now have full sovereignty over not only your crypto transactions, but your user management. You're not dealing with a third party. You have full sovereignty over your policy generation. If you log into a typical SaaS MPC provider, usually you work through their system that they host in order to say, hey, Bob here is part of my trading team. I want Bob to have the trading role in my system, and be able to access these wallets. And with our product, you have the ability to make that happen within the construct of your own institution and not share those responsibilities with the third-party vendor.
I'm trying to think back to my AIG days where I was an IT manager and dealt with SaaS. And it was always a challenge to get those definitions correct, and we had to go back and forth, and it took somebody sometimes months to get there, be able to use it. So it's a good improvement.
But the other, the other improvement on this process, from our perspective, is one of the things we're kind of excited about is we do deploy Cosmos SDK. We utilize that product as the state repository for all of what our treasury does within a user's environment. So if you can imagine, you come in and you log into your platform and you say, I want to create a user. Well, that information gets verified and deposited into the state, which is essentially a blockchain. So it's a private chain that provides that functionality. And then we use validators. We call them our signers. So we have a signing engine that is there to provide for agreement or consensus on each action by referring back to this chain or this state of truth and verifying that, this guy is in fact a user. Oh yeah, this guy in fact has the role, and this guy in fact has the ability to access this wallet, therefore this transaction is valid. And then you get consensus on the number of signers that are interacting with it. And now you take that and you apply that same process not just to a transaction, but you apply it to policy generation. So now your policy generation is being done at a much secure level, so not any one person in your your company can create a policy that might off-road funds, some of that in a place that you don't want it to go. Because it still requires the approval or the consensus of a mechanism to make sure that it's an appropriate, location or use of funds.
I like it.
Does that make sense?
It makes a lot of sense.
Okay.
Yeah, so it's good. It's good for governance.
Yes, and we find that regulatory bodies tend to appreciate this level of control as well. Okay. Because again, it enables a certain level of rigidity in governance that creates that understanding that if you tell a regulator that you're going to be controlling funds, and we definitely can prove that you will maintain and manage control of those funds in a very transparent way, then that tends to fit that regulatory model.
Great. So why is zero trust important then?
Well, zero trust is another one of those terms in the industry I tend not to like because you have to explain it every time, right? Zero trust, people are like, oh my God, that's horrible. They're like, no, it's a good thing. And I wish we could move forward. But zero trust, basically, because of the consensus mechanism that's operating within your environment, you're not worried about having to establish those trust relationships with the other vendors and third parties.
So I want to get a lay of the land here. The current custody landscape.
Yeah.
What is the current custody landscape in the crypto industry?
What we see is we're all familiar with the SaaS products, whether it's Fireblocks or Copper or BitGo, these entities that have been around. And they continue to make iterations more and more towards a self-custody position. But what you don't see is the kind of the final step of just giving up control. And with a lot of these models, not only are you having some measure of control, but you're also having some measure of fee generation. At the end of the day, you're trying to monetize the product, and you find ways to generate extra monetary opportunities, whether it's through usage or through fee or through scale, depending on how you do it. It's pretty typical SaaS model. Even in traditional or Web 2 entities, that growth of cost tends to be with usage. I think what we have decided on is we kind of cut away that fluff. We just get straight to, you're going to use our software, there's going to be agreement, and have at it. Okay. Optimize it, use it to the best. Don't worry about if you're doing too many transactions. Don't worry if you're adding too many users, populations. We have an agreement, you guys get to use it, and that's it. And I think we're the first really to kind of get to that point where you have true sovereignty over all that process at a very affordable and kind of a straight baseline cost. Our goal is to get out there. So custody is moving, I think, in that direction, but for a lot of these entities to take that last step and just kind of give away control over the data and the usage is kind of, that final step that I don't see a lot of these companies doing. And that's kind of what we're providing. We don't care about how you use it.
Okay. So I'm thinking, when I think of custody, I think, okay, there's a few options, right?
Yeah.
There's like the user like me who wants like everything decentralized, who wants their own keys and their own app.
Yep.
Right. Then you have companies like a Swan Bitcoin, where they're overseeing, they have all the data and everything, but you're allowed to use your wallet the way you want to use it.
Right.
And then we have people who demand or want centralized control over their crypto. Like, how do you? There's a gray area in between like that we have to navigate in order to move Web3 and crypto forward, right? Mm-hmm. How do you go through that murky gray area to the other side, and get people more comfortable with the decentralized solution?
I don't really have an answer for you. Primarily because I don't think what we're doing is giving people a decentralized solution or centralized. We're kind of giving them a tool to operate how they want to operate. There's when we talk about consensus with our system, we're talking about consensus within the perimeter of your own environment, right? So by default, by using this product, you have centralized the ability of you to hold sovereignty over your assets, which I think most people want. But if you want to participate in a decentralized environment, our product is just as good for maintaining, generating private keys and holding them for you to have access, to decentralized environments. But I wouldn't call it like the system that's really going to provide decentralization, if that makes sense.
Yeah, so your solution works in all three environments.
Yeah. And what we really think is, if you look at the transition, the blurring edges of the traditional finance world and decentralized finance, we're kind of pushing at that boundary right now, right? Mm-hmm. And we're sort of pushing with our product to be at that boundary, because we want to offer these people who are very used to being in a centralized world, the institutional brokers, the financial or the investment firms, who are seeing the opportunity to start moving money that they control into the decentralized environment. We see our product as an enabler for that, because again, you who are used to maintaining control can continue to control your assets in a very centralized way while participating in that environment.
I like it.
Yeah.
So one of the things that people who were here before FTX and are still here exhibit is resilience.
Yes.
Right? You help bolster financial resilience. How do you help people become, and their self-sovereignty, become more resilient? How do you bolster financial resilience? How do you do it? And why is it important?
resilience. I guess from our perspective, resilience really comes down to having a disaster recovery plan, right? We manage private keys. Essentially, we provide a customer the ability to manage their private keys internally. So for them, the worst day comes from two methods. One, someone messes up and sends funds where they're not supposed to. Well, if you apply the appropriate usage of policies, that shouldn't happen. If you spend the time, and particularly if you're an organization that manages a sizable amount of funds, you're probably spending the time to think through what your risk management is going to look like. And in that process, you're going to create tiers of responsibility, right? And you're going to create roles, and you're going to assign appropriate access to various accounts that these roles are going to have. And if you do that correctly, then you really shouldn't be in a position where one person can accidentally send things to where they're not supposed to. Did you you remember a month ago, the gentleman, the Slurf meme coin, who...
Yes, Slurf, yes.
Yeah, he erased, or what did he do? He
erased like 12 million, more than that.
Yep. So precisely, and I think that's a one-man team, so yeah. I can't help him. But he could have had risk management processes in place. But precisely, one person went and just did a transaction that totally erased that value. And so with our product, you can engage a structure that fits your institutional needs to make sure that people have the access to do the operations they're supposed to do. But the opportunity for them to either maliciously or by accident, misappropriate funds is very small. And that's the kind of thing that you should be reviewing on an annual basis. Somebody left the firm. I hope you're going to use the database to make sure this person no longer participates. And you can do that without interacting with a third party, right? So that's cool. And then having at the end of the day, if you have a node that goes down, that has all the key information, we have disaster recovery processes that enable you to restore that process. And that's an important concept to providing resilience.
So now I got to ask you about, I used to work at some large organizations like AIG before at Prudential and stuff. And whenever it came to the time to do the disaster recovery plan, no one wanted to participate. They all wanted, this is boring, we don't want this. Why should everybody have their disaster recovery plan in crypto?
You got to do it. You got to, whether you decide on our product or someone else's product, you should dedicate the time to think through what happens if this goes down. How do we access our funds? How do we access the ledger that has the private key that is in someone's desk, right? You should think through these processes and have a plan that you can execute in order to do it. And that's part of the rigor that comes from the Navy, particularly the nuclear-powered Navy. Oh my God, we spend 80% of our time underway just drilling on contingencies, right? And even with a regular Navy ship, you do abandoned ship drills. And you practice it. When's the last time we lost a ship? I don't know, but if it happens, our crew's going to get off and they're going to be ready. And that's the same process and mentality you have to have here.
Okay.
That makes sense.
It does. So the future of independent verification, error reduction, and risk is what?
The future of
independent verification. Error reduction. We know I support and risk man
Yeah, ultimately that really is just tagging on the idea of having a strong consensus mechanism that enables you to verify a transaction, sign that transaction, and send it to the blockchain. And here's the big picture, right? This is not just about meme coins and Bitcoin and any other token. This is all about the future of blockchain and where are we headed? Let's talk about the real estate market. A $7 trillion industry in the United States. People are actively working towards figuring out how do we tokenize, house leases or house deeds and all this information that can be tokenized and put in the market because it's a mess right now. You buy a house and you're losing money because of all the different verifications that have to occur. if we move that to the blockchain and it's public and it's accessible, well, you need a process through which you can authenticate and sign. And so even an entity of that nature can have a independent, verifiable process like our signing protocol to operate and interact with the blockchain.
My main concern right now, I think a lot of people's main concern is not the proof of verification, but it's a 7.5% interest rate, and how do you buy a house?
yeah, very true. Well, maybe you should sell some of that Bitcoin, pay in cash, or pay in Bitcoin. Yeah. So I'm not sure, I don't know if we're going to get to that point in the market where people are actually doing the transactions over the blockchain. I think that's a ways off. But the idea that you're using the blockchain as a repository of verifiable data, to say, hey, this tract of land has a survey and verifiable. It should be there on the blockchain and not in a drawer in some random surveyor's office somewhere.
Yeah, I agree. So I want to thank you very much for talking to me today. I enjoyed speaking with you. And I have one last question.
Yes.
Is how can people find out more information about you, about Cordial Systems? How can they become clients? How can they do that?
Very, very easily. Go to cordialsystems.com. And that's a great starting point to see the information and start reaching out to us.
Awesome. Enjoy the rest of your conference.
All right. Thank you.
Thank you.
Appreciate it very much.